One family name appears in conspiracy theories, history books, and whispered conversations about who really controls the money: the Rothschilds. But strip away the myths, and what remains is something far more interesting. A calculated rise built on speed, secrecy, and an understanding of how wars reshape everything. The story starts in a cramped Jewish ghetto in Frankfurt during the late 1700s. Mayer Amschel Rothschild wasn't born into power. He dealt in rare coins and curiosities, the kind of trade that required trust and discretion. While others chased immediate profit, Mayer studied patterns. He noticed how princes needed funding, how wars created desperate borrowers, and how information moved slower than opportunity. His breakthrough came through patience. He cultivated a relationship with Crown Prince Wilhelm of Hesse, one of Europe's wealthiest men, not through flattery or grand gestures, but through reliable service over years. When Wilhelm needed someone to manage his fortune discreetly, Mayer was the obvious choice. That trust became the foundation for everything that followed. But Mayer understood something crucial. One man in one city could only do so much. Real power required a network that moved faster than governments, faster than armies, faster than news itself. So he sent his 5 sons to Europe's financial capitals. Amschel stayed in Frankfurt, Salomon went to Vienna, Nathan took London, Karl headed to Naples, James settled in Paris. This wasn't just family expansion. It was the creation of the world's first multinational intelligence network disguised as a banking operation. The timing couldn't have been better. Europe was about to tear itself apart. Napoleon's wars would redraw the continent's borders and drain every treasury. Most bankers saw chaos. The Rothschilds saw infrastructure. Wars need funding, governments need loans, armies need supply chains, and someone has to move money across battle lines when traditional channels collapse. Nathan Rothschild in London became the family's most aggressive operator. While other bankers hesitated, he committed massive sums to the British war effort. But here's what made it brilliant. He wasn't just lending money. He was solving the unsolvable problem of getting British gold to Wellington's army in Spain and Portugal, while Napoleon controlled most of Europe. Traditional shipping routes were blockaded. Overland transport was impossible. Nathan found another way. He moved British gold through France itself, using a network of agents, merchants, and contacts that operated in the shadows. The French were hunting for British gold to fund their enemy, and it was flowing through Paris right under their noses. This wasn't just banking. It was operational genius wrapped in financial transactions. The family's communication system gave them another edge. They built a private courier network using fast ships, riders, and coded messages. When major news broke, a battle won or lost, a treaty signed, a king overthrown, the Rothschilds knew before anyone else, before governments, before other bankers, before markets could react. The most famous example came at Waterloo. Legend says Nathan Rothschild knew Napoleon was defeated a full day before official word reached London. What he did with that information depends on which story you believe. Some say he bought British bonds that everyone else thought were worthless. Others claim he sold first to trigger panic, then bought at the bottom. The truth is probably less dramatic but more important. He had information asymmetry at a moment when information was everything. What's certain is that the Rothschilds emerged from the Napoleonic Wars as Europe's dominant financial force. They'd financed both sides at various points, not out of disloyalty but because they understood that wars end and debts remain. When the smoke cleared, governments across Europe owed them staggering sums. That debt became leverage, access, influence that would compound for generations. But the real secret wasn't just being rich. Plenty of families got rich and vanished within 2 generations. The Rothschilds built something different. They created a system designed to preserve and expand power across time. First rule: keep it in the family. Marriages were arranged between cousins to prevent wealth from leaking out through inheritance. It sounds extreme, and it was, but it worked. Second rule: absolute discretion. While other wealthy families flaunted their fortunes, the Rothschilds operated quietly. They avoided publicity. They didn't build monuments to themselves. When they did make displays of wealth, it was calculated, designed to project power to those who mattered while remaining invisible to everyone else. This wasn't modesty, it was strategy. Third rule: diversify across borders and industries. They weren't just bankers. They financed railroads, mines, industrial operations, and government bonds. When one sector crashed, others held firm. When one country faced revolution, their interests in other nations remained secure. They thought in terms of portfolio, not individual bets. The family also understood something about power that most people miss. Direct control is expensive and visible. Influence through debt is cheaper and invisible. They didn't need to own governments, they just needed governments to need them. A king who owes you money listens differently than one who doesn't. A minister who needs funding for his next project takes your calls. This approach scaled beautifully as the 19th century progressed. Industrialization required massive capital. Railroads needed funding, mines needed investment. Governments needed loans for infrastructure projects that would take decades to pay off. The Rothschilds were positioned perfectly at the intersection of all these needs. Their wealth became self-reinforcing. Money made more money. Access created more access. Information networks expanded. Each generation inherited not just capital, but relationships, knowledge, and systems that took lifetimes to build. Competitors could match their wealth temporarily, but couldn't replicate the institutional advantages accumulated over decades. What made them truly different was how they thought about time. Most businesses optimize for the next quarter. The Rothschilds optimized for the next century. They planted seeds that wouldn't bear fruit for 50 years. They built relationships that wouldn't pay off in their lifetimes, but would matter to their grandchildren. And they were just getting started. By the mid-1800s, the Rothschild network had evolved into something unprecedented. 5 brothers controlled 5 banking houses across 5 European capitals: London, Paris, Vienna, Naples, Frankfurt. They communicated through encrypted messages and trusted couriers, creating an intelligence network that rivaled any government's. This wasn't just about moving money anymore. It was about moving information faster than anyone else could. Stock prices, political developments, military movements, harvest failures. They knew before markets did, before governments did, sometimes before the people involved did. Consider what happened during the American Civil War. Both the Union and Confederacy needed European funding. The Rothschilds could have financed the Confederacy, which desperately needed capital, and offered attractive terms. They refused, not because of moral opposition to slavery, though they did oppose it. They refused because they'd calculated that the industrial North would eventually win, and being on the losing side of that conflict would damage relationships with what would become the dominant American power. That's the difference between smart money and generational money. Smart money chases the best immediate return. Generational money thinks about positioning decades into the future. Their railroad investments illustrate this perfectly. They didn't just fund individual rail lines, they financed entire networks across Europe, understanding that the real value wasn't in any single route but in controlling the infrastructure that connected markets. When you own the rails, you don't just profit from moving goods. You profit from knowing what's moving where before anyone else does. The same logic applied to their mining interests. They didn't just invest in productive mines. They accumulated strategic positions in copper, gold, nickel, resources that would become essential as industrialization accelerated. They weren't reacting to demand. They were positioning themselves ahead of demand they knew was coming. What's fascinating is how they handled succession. Most family businesses collapse during inheritance transitions, too many heirs fighting over too few positions, incompetent sons destroying what competent fathers built. The Rothschilds engineered around this through brutal meritocracy within the family structure. Yes, you had to be a Rothschild to access the system, but being a Rothschild didn't guarantee you power. You had to prove yourself capable. Sons who showed aptitude got responsibility. Those who didn't were paid handsomely to stay out of the way. Daughters married strategically to forge alliances or strengthen existing branches. It sounds cold because it was, but it worked. Each generation maintained or expanded what the previous generation built. No catastrophic failures. No spectacular implosions. Just steady compounding across decades. Their approach to crisis reveals another layer of sophistication. When markets panicked, they had the capital reserves and information networks to act decisively while others froze. The 1825 banking crisis, the 1848 revolutions, the 1873 crash. Each crisis eliminated competitors and created opportunities for those with resources and nerve. They didn't cause these crises, despite what conspiracy theories claim. They didn't need to. Crisis is inherent to capitalism. What they did was position themselves to survive and exploit inevitable chaos. When banks failed, they bought assets at distressed prices. When governments desperately needed loans, they provided them at favorable terms. When currencies collapsed, they'd already hedged. This created a ratchet effect. Each crisis cycle left them proportionally stronger. Not because they got richer in absolute terms, though they did, but because their competitors got weaker or disappeared entirely. The late 19th and early 20th centuries brought new challenges. Nationalism was rising. Wars were becoming industrial-scale events. Old aristocratic networks were fracturing. The Rothschilds adapted by going even quieter. They reduced their public profile while maintaining their private influence. World War I was the inflection point. The war shattered the European order they'd operated within for a century. Borders changed, empires collapsed, revolutionary governments seized assets. The Vienna House was hit particularly hard. The Russian Revolution wiped out significant investments. But here's what's crucial. They survived. While other great families were destroyed, the Rothschilds endured by having diversified not just across industries but across political systems. When one branch suffered, others compensated. The family structure that seemed outdated proved remarkably resilient. The 20th century forced them to evolve again. Banking was becoming institutionalized. Corporations were growing larger than many national economies. The era of family-controlled finance seemed to be ending. They responded by going even more private, less visible, more specialized. Today, Rothschild & Company operates as a boutique advisory firm. Not the largest bank, not the richest family, but still deeply connected. Still influential in ways that don't show up on Forbes lists. They advise on mergers worth billions. They structure deals that reshape industries. They maintain relationships with decision-makers across governments and corporations. The wealth itself. Estimates vary wildly because most of it's private. Some say 400 billion across all branches and descendants. Others say that's absurdly high. The truth is probably somewhere in between and ultimately beside the point. What matters is they built a system that survived revolutions, wars, market crashes, and social upheaval across 2.5 centuries. They understood something fundamental. Real power isn't about being the richest person in the room. It's about being the person everyone in the room needs. And that advantage, properly maintained, compounds indefinitely across generations. The Rothschilds didn't conquer through force. They conquered through patience, information, and understanding that debt creates dependency. They turned banking into statecraft and secrecy into competitive advantage. While others built monuments, they built systems. While others chased glory, they accumulated leverage. Their story isn't about a conspiracy controlling the world. It's about a family that understood power dynamics better than anyone else, and played an infinite game while everyone else played finite ones. They knew wars end, but relationships endure. Markets crash, but information advantages compound. Wealth fluctuates, but institutional knowledge accumulates. The real lesson isn't that one family controls everything. It's that strategic thinking across generations creates advantages that seem impossible to replicate. Most of us optimize for years. They optimized for centuries. Most of us think about getting rich. They thought about staying powerful. That's not a conspiracy. That's just a masterclass in long-term strategy executed with ruthless precision across 10 generations. Whether you admire it or find it troubling, you can't deny it worked.